Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors. And what we'd like to do is talk about the equity markets today. Okay, so right now the equity market's in a correction, and then we see money rotating out of the tech sector, the NASDAQ, which was the leading sector, and it's going into cyclical stocks like financials, energy, and or materials. Okay, so the question is, what do you do now? Well, if you're a growth stock investor, you probably should be raising cash because all the growth stocks are correcting rather severely, building the left side of their bases, and that's the most volatile place, so you don't really want to be in there. Or you can take a look at a few cyclical names and see if you're quick, you can try to catch some of those. But let's take a quick look at the NASDAQ market and see exactly what we're talking about. Okay, if we look from the March lows, once the NASDAQ regained its 10 and 20-day moving average, that's the green and purple lines right down here, we can see that it pretty much just rode those averages methodically without really violating them much at all. We had a little bit of correction here in September through October where it undercut the 50-day, that's the red line, but it quickly recovered a 10 and 20-day moving average. And then again, it rose above those moving averages. And that just tells you that's where the easy money to be made is in the NASDAQ when it's above its 20-day moving average. And now we see it spilled over. It fell below its 10, 20-day, sliced through the 50-day, the red line. And now every time it tries to rally up, it's running into those averages. So that's just, they're acting like a roof right now. And also at the same time, it's not just that it spilled over, is that volume came in pretty heavy. We got some big volume selling days coming in here. We call them distribution days where the volume picks up and we're seeing big red bars. And when you get a cluster of these days, that tells you that you're in a correction. Now, last Friday, this bottom here might be the bottom. We don't know. That's day one, and we're counting to see if we can get some kind of follow-through day 4 days later. So maybe by Wednesday or Thursday, if we can get a big move to the upside, maybe get above the 10, 20-day, that might tell us that maybe things are changing. But for now, we can take a look at some of the cyclical stocks. Okay, because if we look at for instance, at the Dow Jones Industrial, we see a completely different picture. The Dow is actually hitting a new high. We'll take a look at the S&P 500. You can see it's above its 50-day. It undercut it on Friday, got above it, and it's just kind of like just right there by the 10, 20-day moving average. Okay, so again, we take a look at some of the stocks that broke down and tells you the severity there. A leading stock like Square breaking down, and again, it's below its 20-day moving average. It looks just like the NASDAQ. We can see the same thing in Tesla. You know, and it looks like maybe all these stocks, did they put up a bottom on Friday? It's too early to be seen, but not until they can get back above these averages, because you see this is when they trend nicely here. That's where you want to be. You don't really want to be in these stocks right now. Okay, and then also, so let's take a look and see what's working right now. Some of the cyclical stocks that are working are some of the banks. So we look at the Fifth Third Bank. We see that's just been trending all along, moving to new highs. You can take a look at a stock like JP Morgan. That's trending along, moving to new highs. Some of the oil plays, Continental Resource. Now, a lot of these are extended, so you can't really buy these. It'd be difficult to buy. Matador, another oil driller. Explorer moving up nicely. Oasis Petroleum. Now, these reversed yesterday, but, you know, we'll see how they act. But some of the other stocks like CF Industries hitting new highs, and that's actually a stock we bought yesterday. As it's moving out of a nice consolidation here, the volume picked up nicely. We can see that right here. Volume picked up, broke out through this consolidation here, and that's acting really well. Another one in this sort of, call it commodity kind of space, is Westlake Chemical. These chemical things came out of a nice cup handle here. Again, volume picks up, breaks out, boom. And we're waiting to see if this is follow through or if these are just sort of one-day wonders to be seen. Another stock we tried in the leisure space is Polaris. That symbol is PII. Also here, had a nice, this is what I call a base on base pattern, formed a base here, moved a little higher, now breaking out of this base. And again, these last 2 days, we saw volume pick up very strong. And these are the kind of stocks you want to be in. Now, in this industry group, the leisure group, you see that across the board. We can look at a stock like Johnson Outdoors, which is also moving higher out of a short consolidation here. The volume kind of picked up here a little bit, and it's moving higher. So the point is, if you want to be in the market, you do want to take a look at some of these cyclicals if you're quick enough to rotate into these. And the reason is that also, I'm going to share another chart here with you, and it's the commodity index, the CRB index, divided by the Qs. Okay, so here we have the CRB. It's a ratio chart divided by the Qs, and that NASDAQ 100 ETF. So all this period, as this chart's going down, that tells you that the denominator, the Qs, are way outperforming commodities. And then what we got is a few false starts here through May, where it looked like commodities might start outperforming. That quickly died. Happened again here at the end of the year. But now we actually have, you can almost say, like a breakout where commodities are clearly outperforming the NASDAQ. So that's the place you might want to be when you want to look at future trades. So it's always let price and volume be your guide. But if you want to be in the market, you probably want to take a look at the cyclicals, try to catch something that's not too extended, and you don't really want to be too much in the tech space at this time until we can see maybe a bottom U-turn and then get above its 10 and 20-day moving averages. So as always, like I says, let price and volume be your guide. This is George Tkaczuk, RCM Wealth Advisors. Have a great trading day.